Here. It is approximately 12 noon in Honolulu, 6 o'clock in New York. It is Friday, Good Friday, as a matter of fact, the 6th day of April. And this is the daily report for gold and silver, our weekend review. As gold and silver are not trading in the United States, of course, in observance of Good Friday and Easter, we do have a closed market, so the prints that you're seeing on the board reflect the close of yesterday. We did get a report that has just surfaced, and this is off of the Bloomberg News Press and came out a couple of hours ago. Gold in London rose for a second straight day after U.S. employers added fewer jobs than originally forecast, boosting prospects for the Federal Reserve to use additional stimulus measures to spur growth. Of course, they're talking about QE3 or quantitative easing. The rumor mill goes back and forth, and the speculation, of course, goes back and forth. On today's report, I want to spend some time covering the week itself and talk to you about what I am looking at for possible strategies and price movements in the precious metals markets over next week. All here on today's weekend review. Now, besides the jobs report, and the jobs report will have an effect on the stock market, the dollar, as well as the precious metals. But in terms of gold itself, the strike in India by the jewelers themselves, the 3-week strike is in fact over, and that should have some significant impact on the prices of the precious metals market, specifically gold. Traders, as we look at this market and how it has been trading over the last month, as we went in this deep corrective period, market trades from approximately $1,800. That is the top right in here. Of course, well off of our $1,900 high that we had before. But as this market came down, of course, we had our 5 count, A, B, C, D, and E. And in fact, when we take a look at that area, we have a 61% retracement. Market comes rather close to it. So in terms of assumptions, it was fair to assume that we had reached the bottom of this correction. Correction was terminated. We were going to enter an impulse phase. An impulse phase, of course, is going to be a series of waves moving to new areas or at least attempting to take out this $1,800 area. However, our first indication that this market wasn't reacting in a standard way in terms of what Elliott Wave would forecast was this first impulse wave up here, because typically this impulse wave should go anywhere between 50 and 75% of the decline that you saw during the correction. And as you can clearly see, this market stalled out much before that, in fact, stalled out in terms of a retracement area just at about the 38% retracement area. In other words, when the market came down, was only able to recoup about 38% of that loss. Now, when the market corrected, it corrected back to this particular area. This is our double bottom right in here. As you can see, it matches in 2 areas, so we had a nice double bottom. So when the market came back up, as you can see here, it again stalled, but curiously enough, it stalled with a lower high. Now, whenever you get a series of lower highs and lower lows, traders, you have a market that's declining. There's no other way to look at it. The market did come down and it tested some real support. And this is, to me, a very, very critical area, as we've spoken about all week, this 1622, 1624, because that's a 61% retracement of this entire move right up in here. And when you consider anything below that is a really, really drastic fall, that would tell us if, in fact, this market starts to head below this area and even break through, for example, 1600 down this way, that we are absolutely still within a defined correction, and it's a matter that our count is incorrect Not that Elliott Wave isn't a system that will work well. However, at this point, what we are looking at is the fact that we've gotten, again, a real strong band of support here. And when we look at the shorter term Henkin candles, we have gone back to a pretty strong green candle right in here. That to me is an indication that we might in fact be looking at some strong enough support in this area to see this market genuinely begin to trade back up and back higher. That's what we want to see. However, as I said, we're in a critical area between 1622 and anything below 1600 is a signal that the correction that began really towards, call it the mid of February, and took us through the month of March is still ongoing. My belief is that as long as it holds within this area, we should see the market recoup and move to higher pricing. Traders, the next chart that we want to take a look at is going to be a 420-minute. This is our silver chart, of course. Again, this is our spot month. What we talked about really through the mid part of the week was I put in this one line. It simply represents a couple of tops that we had seen. The market was roughly trading in this area, and it was quite clear that we had hit this triple top. And the market did come down, and it came down solidly. But here's what we're looking at. Just as we had strong technical data to support the possibility of resistances, double top prior to this, in the same way, we are getting some strong technical data to find support just above $31 per ounce. And as you can see, standard candlestick chart, this market came off of that, currently trading 31.68, and then of course that is as of the close of yesterday's market. Now traders, when we convert this into our Henkin Ashi chart, as you can see quite clearly, we are also back in green. Green, of course, is our signal that the uptrend has begun. However, small candle size, we do have the lack of these lower tails. That's what we look for. But until we get a little bit more data, or what I should say, larger candles coming in, then we will get confirmation that we've got somewhat of a real trend underway. If you look at the candle sizes in some of these rallies, you can see that as this trend accelerates, so do the size of these bodies within these candles. And that gives us a clear indication, of course, that the trend itself, the strength of the trend, is growing. So we're going to have to see if we get a similar reaction on silver trading next week. For those of you who observe Easter and Good Friday, I wish you a very happy Easter, a blessed holiday. And for all of us, my one wish is prosperity, health, and peace on earth, of course. This has been Gary Wagner, wishing you as always good trading. We will talk to you after the holidays on Monday for the next daily report. Bye-bye.